What's good, people? It's your boy Kurbz right here, back at again with another video. This time we're gonna learn about how to trade supply and demand. So to just get it started, we're just gonna jump into it. I'm just gonna keep it simple. What basically supply and demand is: an uptrend. Always remember that an uptrend, the break of structure, that has a break of structure, either in higher time frame to lower time frame for more confluence, right? And then it forms a demand right here, a demand right there, and you wait for a retracement. Once you touch a demand, start rejecting, break a candle, you enter. That's for a demand. And then you put your stop loss right here and go for like a 1 to 4 or 1 to 5. But the average RR for this strategy is, I would say, 1 to 4, 1 to 5. If you have that patience, it's definitely gonna hit. There's no guarantee though. It's a strategy, but it's a strategy that has a high probability of winning. So the keyword here is probability. So it's not a guarantee, not at all, but having a confluence that is simplified and easy to use every day, will increase your confidence going into the market, and it really boosts your profitability. So this is basically for demand. That's the same thing for supply. It's a trend going downwards, keep breaking structure, break a structure, and then there's a supply right here, wait for a retracement, boom, went back, wait for a rejection, has a strong volume to the opposite side, it breaks, you enter. That's pretty much the strategy. So this for supply right there, boom, it's a high confluence trade, and that's for supply. So let's find some example. We're gonna put it in replay mode, boom. Okay, so waking up at like 7 or something, I'm gonna have to see where we're at right now. So what I do is 1 hour first. I look at the 1 hour. Where is the market going? Okay, on the 1 hour we have this bullish momentum going to the upside. That's just reading what the recent candle gives me on the 1 hour. On the 4 hour, it's still a bullish momentum. We get this 2 candle, 2 4 hour, which means in a 4 hour time frame, we have volume going up on the recent candle. I'm focusing only on the recent candle because that's what the price is doing right now. And I'm a scalper, so I'm only gonna have to focus on the 5-minute time frame where I enter. So make sure my bias for today is bullish, let's say, and I'm gonna have to go for a 15-minute, see if I break structure. I broke structure to the upside over here, giving us a change of character. This is a change of character because we've been on a downtrend for the longest time, and then we just recently broke structure on this recent high over here, and then on London Open we broke structure with the body close, going above that recent structure right there, that high. So what we're gonna do, since that is a huge push to the upside, and that's a break of structure, pretty much a change of character, where does that push starts? It's got to be over here. That's where the huge push starts, right? So now that is a valid demand zone right there on a 15-minute. With the 15-minute, I'm not gonna trade on a 15-minute, but that's another confluence. If I see a huge demand, and if a huge demand on 15-minute, well, then I can drop down to 5-minute and really simplify it with this one. So there's gonna be a demand inside the 15-minute, and if you look down the 5-minute, there's gonna be another demand. After that demand, you want to find a gap of the market, because that huge push, it really provides this gap right here and over here. So that need a retracement back down to this demand and filling up this demand zone right here. and filling up that gaps. That's why it's a high confluence trade, because I always see this all the time. Once there's a huge push and once it forms a demand, it needs to go back down and right down. It needs to retrace back down to where the demand is, and that's where the money is, right? So what we want to see as a supply and demand traders is a retracement back to the demand, and then a break. That's where we can enter. So let's play this. Goes back down to the demand immediately. It taps into the demand, fill in this fair value gap or imbalance or a gap right here, and look at what happened. Boom. It's right there. You can fucking get all that money right there, straight up. This might be a long trade. I would have closed it like right over here. You know what I mean? But you already made money right there. That's like a 1-to-2 ratio. But if you're, for me, I like my stop loss to be tight. So you already tapped the demand. I'll put my stop loss over here, claiming a 1-to-4. So that's for demand. Let's look for another example. All right. Going back down to 4 hours, 4-hour time frame. Look where we at. There's an accumulation of a bullish momentum. It's bullish. It's going to the upside. But that doesn't confirm anything, because we need to see a high gets broken. So it's a break of structure. I need to find a high, which is right over here. On a 1 hour, dropping down to 1 hour, find a high. Boom. A high right there. That's a break of structure right there. If you guys can't understand break of structure, make sure you search it up on YouTube. You know, these are the basic stuff for the market. So dropping down 30 minutes, you know, going down to like a lower time frame, we can see a demand zone right here. But more specifically, I look for 15-minute demand zones or 5-minute demand zones. So as you can see, look, there's a demand zone right here. There's a demand zone right there because there's a huge push, breaking a structure, which means there might be an institutional push or manipulation, right? So once it comes back down to this demand zone, as we can see, we have a gap right here. And now that becomes a high confluence trade. You know, for me, with this strategy, is not guaranteed. Always say that it's not guaranteed, but I am confident to take this trade because we have confluences. We have a good push to the upside. We have a break of structure, boom, and we have a demand zone and a gap. That's all you need. You don't need to overcomplicate it. You know, that's really it. So once you retrace back down on New York session, boom, look what happened. Boom. Once you break a candle right here, that's where I'm gonna enter. That's all it is, guys. So it's not rocket science, you know. It's all about probability game. Can you do it again and again and again? You know, the strategy is so fucking easy. That's really it. But can you do it again and again? Take some losses. But the point is, can you win more and lose less? That's really it. Look, let's play this. Boom. It hits a fucking TP, bro. What? Yo, it's 1-to-5, bro. This is 1-to-5. This can literally, if you have like a 200K account and you're risking 0.5%, you're risking $1,000 to get, you know, $5,000 in just one day. And that can be your, you know, whole salary for the month. You know what I mean? So having this skill over here and putting it for free, you know, for you guys. So this is an easy strategy. You don't need no ICT, fair value gaps, and you know, liquidity grabs and all that, because like that just confuses you, bro. You think you know about the enigma, and you think you know about like the Fibonacci, OTE, and all that, brother. If it works for you, it works for you. But like most of the time, ICT, you know, strategies, you know, not to hate, but like for beginners, I don't want you guys to be confused. You know, this is all it is. It all comes down to supply and demand. Okay, let's put an ICT strategy on this. It's literally, okay, we have a 15-minute order block right there. That's an order block. 15-minute order block. What does it do? You wait for, okay, it taps in the order block. That's PD array or POI. You go in 5 minutes. It broke structure. It broke structure over here. Boom. Now you're still waiting. You know, most of the time you actually miss the whole move. Now you're still waiting for a fair value gap. Once it broke structure, just a fair value gap over here. You literally miss the whole move, bro. You're still entering over here. Whereas supply and demand traders, we already entered right on the break of a candle on 5 minutes. And you start dropping down to, you know, like a fair value gap over here on a 1 minute. You know, like there's so many things about ICT's strategy that confuses, you know, a lot of traders. For me, I used ICT before. I know how to use it, but I wasn't profitable in it. You know what I mean? So I try to find out what is the root of all strategy. It's supply and demand. Where does this trend start? Supply and demand, right? It's not guaranteed, but it's, look, there's a high chance, right? Where does the institution, you know, or the market makers want to go? Well, they push it up. They're the manipulators. They're the market movers. Well, then what you want to do is, you know, have a trend, let the market makers do its thing, pick the right supply and demand where the market makers start moving the market, and then trade with them. You know, like, it doesn't make sense. You know, like, you don't need to overcomplicate things, brother. Like, I don't want you guys to be falling into the trap that SMC is the only way to SMC and ICT is the only way, because, bro, that's just, you know, you're actually like supporting a cult now. You know, you have that cult mindset now. Build your own strategy and let your experience grow, and let your discipline, you know, grow as well. So you have the strategy right here, and that's pretty much it, bro. Main advice for me, for traders who are like starting, I would say, if it doesn't work, if you're learning ICT, you're learning support resistance, you're learning, I don't know, Fibonacci or anything, don't change it up first. You gotta go harder first, and then if it doesn't work, change something up. Don't stay in that strategy. If you know to yourself that you've been unprofitable for like 2-3 months or 4 months with that strategy, you know, that's when you can change it up. You know, if you start being stressed out once you look at the market and you're not even sure about the strategy, make sure you change it up. You know, it's something that is much more simpler, something like supply and demand, and you know, make sure you're confident in the market. It's not supposed to be hard, bro. It's supposed to be simple for you to look at the market, and you should be accepting that, look, with this strategy, there's a high probability, but there's a chance, you know, low chance for you to lose. So that's what the point of a strategy is. You know, it's literally reducing your losing rate and literally dropping it down to 50-50 chance. So that's a huge chance for you to win. So once you, like 50, I would say 60-40, you know, for you to chance to win. You know, with the strategy, that's one confluence. With you taking the trend with confidence, that's another confluence. With you, you know, consistently making money, that's a third confluence. That, look, you stay in the strategy. So, you know, it's all about a probability game. If you can't think of probability, you shouldn't be working. You should be doing trading, bro. So, you know, maximize all your confluence. Get your strategy up. Get your mindset up. You know, make sure you can do it consistently. So, yeah. So this is pretty much a strategy. Thank you guys for watching. It's a pretty short video because it's pretty simple. You know, there's nothing to really talk about. It's more so, you know, 90% psychology. How can you continue more and more, and how can you do it, you know, in a longevity? So, you know, make sure you guys subscribe, share this. You know, one of the best strategies right here, most simplest strategy. You know, subscribe to the channel. Discord is gonna be down in the description, so make sure you guys join, and peace.